This will be a brief video on optimal trade entries, where I'll discuss what to look for and how to utilize them. The content of this video is largely based on a previous video by ICT, which focused on optimal trade entries and had a duration of approximately plus 40 minutes. I highly recommend watching that video as well. My goal is to summarize the key points from ICT's video and deliver them in a more concise format. The first criterion for an optimal trade entry is a valid market structure break. In the case of a bullish entry, for example, if the price breaks higher highs and shows upward displacement, it's important to draw a Fibonacci retracement from the low to the high of that move. The optimal trade entry zone is typically within a 62% to 79% retracement of the move. It's ideal for the candle bodies to respect the levels of this retracement. Entering somewhere in the middle of this optimal trade entry zone inherently provides a 2-to-1 risk-to-reward ratio, assuming you target the top of the retracement high. To aim for additional targets, ICT suggests scaling out at different levels, such as the 23.6 extension, 61.8, and 100, which represent a measured move of the prior retracement. Once you have taken profits at the first scaling, it is advisable to adjust your stops to break even. How you choose to manage your trade depends on your preference, whether you prefer to exit at the highs for a 2-to-1 ratio or hold a portion to target higher levels. A strategic approach to profit taking is to visualize a bell curve of all the profit targets. For instance, you could take a small portion of profits at the first scaling target, more at target 1, and the majority of your position at target 2, while leaving some runners to reach target 3. Let's examine some examples to see how this strategy can be applied. The following charts are all based on the forex pairs. The first example is derived from a 1-hour time frame, illustrating a market structure break to the downside. The optimal trade entry, OTE, aligns with a fair value gap, providing an opportunity to refine your entry further. Once the price retraces into this area, it is an appropriate time to consider short positions. Take your first profits at the retracement low, followed by scaling out at the 23.6 retracement and 61.8 extension. Moving to a 15-minute chart, the second example displays a market structure break to the upside. By using Fibonacci retracement with candle bodies from the low to the high, you can identify an optimal trade entry in an area that coincides with a fair value gap. Entering the market in this area, you would place your stop below the lows. Consider taking your first profits at the retracement high, followed by the 23.6 retracement.
Introducing Mugen Markets. Mugen Markets is an A-book broker, providing you with direct market access and ensuring transparency in every trade. They're currently working towards obtaining regulatory approval to delivering the highest standards of security. Experience lightning-fast crypto deposits and withdrawals. Mugen Markets brings you ECN execution, giving you direct access to the interbank market, ensuring the best possible pricing. Join Mugen Markets today. Link in the description for 100% deposit bonus.
Lastly, let's observe a 5-minute chart as our third example, which showcases another market structure break to the upside. Here, the price encounters the 78.6 retracement level and promptly rejects it. Ideally, you would enter within this zone, possibly by using a limit order at the 78.6 retracement. Take your first profits at a specific level, followed by the 23.6% extension, and exit most of your position at the 61.8% extension. I hope these examples have provided a clear demonstration. If you have any questions, please feel free to comment below or reach out to me on Instagram. I appreciate if you like and subscribe. We are going to be back with new content very soon.